We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro. I want to welcome you to your daily real estate investing podcast and YouTube channel. Today, we are here with Brian Briscoe of the Tribe of Titans. And Brian and I were talking a little bit before the episode. And one of the things that we both heavily agreed on is the need for education in the real estate syndication and real estate investing space. And that is what Brian is here to talk about. That's what we're hoping you can take out of this episode. So, Brian, how are you doing today?
Doing great. Thanks a lot, Casey, for having me on the show.
Absolutely, man. We're so glad to have you here. We're always glad to have somebody here that's interested in helping people learn and showing them the ropes, I guess, if you will. Again, we were talking about the importance of the education part of it. So I guess just to give the listeners maybe a little backstory on yourself and
hmm
where you come from, and then of course we can move that story forward and hear about your your possible investment opportunities slash the education part of it. So tell us a little
Yep.
bit about yourself.
Well, born and raised in the Salt Lake City area. Once upon a time, I wanted to be a college professor. I remember, 14, 15 years of age, I
Yeah,
realized I enjoyed teaching, right? But
sure.
I started really looking at things and, what I didn't enjoy was, wiping noses, the attitudes you get in junior high school or,
Yeah.
high school students that just don't want to be there.
Yep.
And so I decided that I wanted to be a college professor. All right.
Okay.
And I was good at math. I didn't enjoy it necessarily, but I was good at math. Um, so I went to college and I majored in math. It was just like, all right, I want to be a college professor. It's going to be math, and
There
that's
you
kind of
go.
how it worked. Took a 2 year break from school to serve a mission for my church. Got 2 degrees in math. I was in a PhD program, and then September 11th happened. And
Oh,
that was a big change in my trajectory. Did a lot of thinking, a lot of contemplating. And at the time, I mean, like I said, I was excited about teaching, but I had kind of come into the realization that I wasn't uber excited about math. I
yeah.
liked it and I was good at it, but I was at the point where I'm supposed to choose a thesis topic, and I'm like, there's nothing here that excites me. And so I don't know. Maybe I was looking for an out, but September 11th, just I looked at that and it kind of pissed me off, and I decided
Yeah.
to go active duty in the Marine Corps. So
Oh,
yeah, so that
that kind of
was
pissed off. Okay.
that kind of pissed off, right?
I
Like
got you.
grab your guns and
Let's
pitchforks pissed
go.
off.
Yep.
So yeah, I mean, ended up doing officer candidate school, and basically, 6 months ago, I retired after 20 years of service. So it was a literal 180 change of direction. Maybe 90 degrees. I guess I'm the math guy. 180 makes you go backwards, but
Yep.
a 90-degree turn. But end of the day, here I am as a young Marine Corps officer, and I'm looking at the pay charts, and part of me was excited and part of me was depressed. Part of me was excited because I was just like, hey man, 2 years from now I'm going to get a promotion and I'm going to hit the next pay hurdle, and man, I'm making $1,000 more a month. But the
Yep.
but the part that wasn't exciting is I was looking 20 years down the road. I'm like, man, that's all they make, you know?
Yeah.
That's all. Wow. But anyway, I started looking at other things, and like a lot of people, I read the Rich Dad Poor Dad book, right?
Yep.
And um, I remember
I'm gonna
thinking,
get an affiliate link for the Rich Dad Poor Dad because that seems to be the recurring topic on my show.
I know. I mean, it comes up on my show as well. It's like the most
Yeah.
cited book, probably on any, entrepreneur-ish
Yep.
podcast. But
It's that's the seed. It's like it's the seed
yeah,
book where everything started.
yeah, and it in my mind, I didn't realize it at the time. I had a huge mental block. Okay, in that book, he talks a lot about commercial real estate. That's one thing that he did. He and his wife bought apartments.
Yep.
And I looked at that and I said, man, that sounds way too complicated for somebody like me. I'm a
Yep.
son of a postal worker. How can I buy an
Mhm.
apartment building? But what I did is I started thinking, well, what can I do? And the answer was single family homes, and I'm like, okay, I can probably figure out how to buy a single family home, and I can
Sure.
probably figure out how to turn it into a rental. And that's what I did. So 2007 pre-crash, I bought my first one.
Yep.
2008, I bought my second one, and it was, um, unfortunately, the lending dried up after that, and I went on
Do
a
you mind
couple year
telling us
hiatus.
what market was that you started in? I mean, is
Yeah.
that just where was that? Salt Lake?
First one was Salt Lake because it was a market that I knew.
Yep.
And fortunately, Salt Lake was, they didn't have a real big run up from 2004 to 2007. And so when the market crashed, there wasn't a huge bubble, right?
Okay.
And the second one was San Diego. And the second one was a house that we moved into, and it was post crash. And, we bought it on the slide, so it didn't
Okay.
quite, we didn't quite time the bottom, but we were pretty close. Um,
And
the
you own both of them
house,
at the same time, so did that
mhm.
kinda take care of the one that was bought too high? You kinda bought one towards the
You know,
bottom?
I mean, the Salt Lake didn't depreciate too much after that. I mean, I bought that house at, I think 195 if I remember.
Okay.
And, according to Zillow, it didn't go below 180, so it was like there wasn't a lot of a dip there. The second one we bought on the slide, we paid 305 for it. And according to Zillow, it probably dropped to 280, right? So
Yeah.
we were never too far underwater. Um, but I was convinced that real estate would be my ticket, and ended up doing pretty, fairly well. Fast forward, 10 years later, um, I hadn't done a whole lot. Low browser, sorry, got a pop up. Backup recording is going to start. I don't know what to do with that.
Just, uh
Please make sure you might have enough free space on your computer and you're not browsing incognito mode. All right. All right. So sorry about that.
that's cool.
Um, all right. So, fast forward 10 years later, I hadn't done a whole lot. Like I said, the lending dried up, and then, I did a handful of deployments that kind of took me out. And I remember on one deployment, I had a lot of extra time, and I started really thinking about, how am I going to reinvigorate my real estate activities? How am I going to get back in the game? And, for some reason, single family didn't really excite me.
Yeah.
Um, it was slow is what it was. I mean, nothing wrong. I mean, I ended up at the time I probably had $250,000 in equity in these two homes. They
Sure.
had both appreciated by more than, $100,000 over time. But, I wanted something that would build my cash flow and build my wealth faster.
Sure.
And that's what got me into multifamily. I ended up selling both of those single family homes to be able to get into multifamily. Um,
So I ended up selling the 2 single family properties to get into multifamily. I knew a couple of things. I knew I was going to have, earnest money deposit. I knew I was gonna have to have, like, a down payment, and I knew I was going to need cash to be able to jump into it.
Sure.
Refinancing wasn't gonna work because my payments would have been a lot higher than my income. I didn't wanna be in a negative cash flow position on those, otherwise I would have loved to keep them. But, so yeah, that's what I did. I sold both properties. Started looking at other properties, multifamily properties that I could buy by myself. I'm talking 6, 8, 10 unit properties.
Yeah.
Um, and I ended up going to a conference that I think, also changed the trajectory. It's something that um, I saw that there was another way, maybe a better way, at least for me, and that's the syndication route.
Oh wow.
So
Yep.
end of the day, I took some of that money that I had sitting on the sidelines, and I paid for coaching. It was in my mind at the time I had 17 years of military service. I had a 3-year runway, and I was working at the Pentagon, which is not the best place in the world to try to run a side business. But
Yep.
end of the day, I got coaching to be able to accelerate, what I was doing, and help me to focus on doing the right things at the right time. Um, and through that, I ended up finding, a couple of partners, and about 6 8 months later, got our first deal, our first property under contract. It's 55 units in Spartanburg, South Carolina. And then after that, in the next, in the last 3 years, I've closed on a total of 10, multifamily properties as a general partner. So,
How many
um,
doors is that?
655.
Oh my. So yeah,
Yeah.
you bring some experience to the table for sure. So when you first started making the transition from single family to multifamily, and you said you had about 250,000 in
Hmm.
equity, um, did you, of course, from a technical standpoint, had you lived in the house in San Diego long enough to get the 2-year tax exemption, or did you have to do 1031? Again, that's very technical,
Yeah.
but sometimes it
It's
creates, maybe it gets juices flowing.
it's a good question, and I lived in both of the houses long enough to zero out my capital gains.
Oh
Um,
man.
because
Yep.
yeah, because I'm active duty military, the normal rule is you have to live in it 2 out of the last 5 years to get a $500,000, you know, um,
Exemption or
exemption, right? Two
yeah,
250 for me, 250 for my wife. But if you live there less than 2 years, they basically just scale it down based on how long you lived there. And we lived in the San Diego house for about a year and a half. And um, the other thing the IRS does for military is they extend your 5 years out to 15. Right. And so when we sold
okay.
that house 10 years later, we had lived there for just over a year
So
in
you
the
just have
last
to live
15.
there for a certain percentage of 15
Mhm.
years rather than 5 years,
Right.
and you get a pro rata type
Yep. Yep. You,
scenario.
you you get it on the 2 of the last 5, but like I said, it was 2 out of the last 15 for me. So, after 10 years of owning that property as a rental, we were able to write off all of our capital gains. Same with the other property as well. And I mean,
Sure.
we're talking, 100, So, when you do the math, 6 months
Yeah.
is really
Now,
all
is
you
that
need.
strictly active duty military, or is that a benefit that carries down the road, or do you know?
I think it's only active duty.
Okay, that makes
I
sense because
just
they're the ones
remember
that
that
are
I
moving
qualified.
around.
Yeah.
Yeah,
And it's as active duty, you don't always get to choose when you move,
that's right.
and part of the reason we kept the San Diego house is we figured, hey, it was a fleet concentration point, and there's lots of military bases, Navy and Marine Corps in San Diego, and we
Sure.
figured, we'll eventually come back, and when we come back, we can just move back in, and that was part of the mentality. Besides, let's rent it out and build some equity, the
Well, let's be honest. You couldn't buy a house for $305,000. I guarantee you, you can barely buy a case of
Mhm.
water for $305,000 in San
Yeah,
Diego.
yeah,
I mean, it's so you had way more potential for upside than you did downside because you knew it
absolutely.
wasn't going to go to zero.
Yeah,
Even if it even if it went to half, you knew that the upside was still massively under.
yeah,
It
and
just seemed like that was a very wise move. But I
yeah, we
love
we,
that
we
those
bought.
military laws. That was unbelievable.
Yeah, we bought on the slide, right? So when the apartment when the market was going down, so buying on the slide, we knew that we weren't buying at the top of the market, and I had the feeling that the market would eventually bounce back, and it did. So, um, obviously, had I held it longer, I probably would have had another couple 100,000 in equity, but end of the day, we were able to take that money and convert it into equity into 10 multifamily projects, which, at the end, I'm much better off for having sold those and, launched a multifamily career.
Awesome, man. That's great, and especially, if you can take, I just that's just everything about that whole story is unbelievable. So,
Mhm.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cashflow Pro part of your day. Now, back to the show.
all right. So now we've talked about the your path into the multifamily space
Mhm.
from and your obviously your path leading up to 600 plus doors, which is where I assume you are right now. Is that correct?
Yeah, we're at 600, 655. By the time this podcast episode airs, we'll probably have sold off 82 of them. We have a couple that we're selling this year. Just it's you try to buy low, sell high
Sure,
is the idea. And I mean, since they're syndications, I think if it was my personal portfolio, I'd buy to hold forever,
sure.
or at least longer term. But we syndicated them, and as such, we have a bunch of investors who came into the deal, and we advertised to our investors that we were trying to maximize their IRR,
Yep.
right? So their internal rate of return. Um, and we felt at the beginning of the year that the Fed had already started talking about, hey, we're going to start raising interest rates. We figured that there's going to be an economic slowdown coming up, and it looks like that's exactly what's going to be happening. Anyway, a couple of months ago, we decided that hey, our job, what we advertised to our investors, was try to maximize their ROI,
Yep.
and right now is the best time to sell. We're not going to have nearly as much appreciation in 2022 as we did in 2020 and 2021.
Yep.
So yeah, we've got a lot of our properties for sale right now. Like I said, if it was my personal portfolio, I'd just
Well,
hold
it's
on.
similar to the San Diego situation that we mentioned
Hmm.
earlier, where you're sitting at basically a price of a home that where there's nothing but potential up, or there's way more upside than there
Hmm.
is down, and now you're at a level with some of these purchases, especially if they were bought, some years
Hmm.
back, where there's far more potential for downside than there is
Yeah,
to try to make another $50,000, and so
yeah,
at the end of the day, yeah, protection of the investor's money, cashing out, not
yeah,
having a emotional relationship to any of the properties, and just basically moving the money from one to another. Now, one thing that I've seen from afar, some of these folks that are moving out of doing exactly what you're doing is then when the investor's like, okay, we want to reinvest, now
hmm,
it's almost a lateral move where you're having to reinvest at that level, and so
yeah.
I guess it just depends on what, basically what the investors want or need or what their wants are.
Yeah, and I mean the investors are going to be looking to replace that capital. That's the only downside to the cash out portion is, your investors. Yeah, we got them a great ROI, and I don't think the market's going to necessarily go down. I
Sure.
think it's going to not go up as much. I think it's going to flatline, maybe flatline. I think it's still going to slightly go up. I mean, inflation's still here. Inflation's still going to push prices up. But when we had, 30-40% appreciation in the last year, this next year we're probably going to get maybe back down to 3 to 5% appreciation.
Yeah.
And once again, our investment thesis was let's try to maximize the ROI for our investors. And that being our investment thesis, selling now maximizes the ROI.
Yeah.
Selling a year from now will probably still have a higher price,
Yeah.
but the average rate of return is going to go down, and
Yeah.
so that's what we advertise to our investors, and that's how we feel we need to act right now to
Well, and
stay
it
true to that.
it could potentially give you some opportunity as well if something else came along that another syndication was like, hey, it's, we're exiting, and this would be a good deal for somebody else. And if it opens up an opportunity for possibly replacing the capital into another asset. So
Yep.
now I want to kind of shift here, and I'd like to talk a little bit about the education element that
Hmm.
that you all bring to the table. And of course, like I said in the very beginning, educating people who are interested in the syndication investing space
Yep.
is so crucial, because a lot of people, and for people like myself, for we where we're looking at capital stacks and it all just kind of makes sense to us, a lot of people are like,
Hmm.
what you mean, I own what? So I want you to explain a little bit about what that is, what folks can learn, and then of course at the end, I most definitely want you to talk about how people could possibly join or get with you if
Yep.
they're interested. So go ahead.
Yeah, so we have I have two different avatars, so to speak, or two different ideal investors that I'm trying to educate. I'm looking for the people who want to do what we've done,
Yeah,
who want to syndicate as well, and that's what our tribe of Titans is designed for. It's designed for people who want to syndicate. I'm also looking to educate people who are interested in passively investing, and typically, the type of person I'm looking for is the higher income earner who um, basically wants to be able to eventually exit their job, who wants to take some of that income, invest it wisely, and get some fairly low risk double digit returns.
sure.
So a lot of the educational products that we put out are related to one of those two things, and the Tribe of Titans primarily is designed for the people who want to syndicate, who want to learn how to buy apartments. Right now, that community's got about 200 people in it, and most of them are trying to get to their first deal. We, probably 10 to 15% of them have done one or more deals and are there to be able to help out. So um, on the passive investor side, we do 506Bs, which means we have to know people
Yep.
before we bring them in. So once I get on the phone with somebody, I try to figure out where they are in the process. And I have a bunch of articles and blogs and whatnot that I've written over the years. And based on where they are, I set them up on I've got the campaign scheduled, so it's just one of the things where it's, push button. They're going to get, an email every week that kind of walks them through the process, to help
Sure.
educate them to make, better decisions. So um, that's essentially what I do to educate. I'm very active on LinkedIn as well. Put a lot of educational type material on LinkedIn. As it regards to or as it relates to apartment investing. So like I said, a lot of what I put out is aimed at the nurturing and the educating people. Just depending on what side of the fence they want to be on.
Yeah, and I don't know if you find it as almost, I don't even know how to put this, but it's, to me, I've had people on this show who were like, imagine yourself back in the San Diego house before you knew
Hmm.
about real estate syndication and multifamily investing, so on and so forth. And I've had people on this show that are like, yeah, I got a master's degree in management, or I got whatever the case is or was.
Hmm.
And they're like, I had no idea that this stuff even existed. Like people, and mostly investor type people who are like, what, you can use, like people that have 401ks and IRAs and so on and so forth, that don't realize that, hey, they can take that and self-direct it into these
Hmm.
these investments. And again, that's where the education element comes in. And it's not so much in us teaching, like, or people retaining like they're a student or something. It's more along
Hmm.
the lines of, hey, did you even know you could do this?
Yeah.
And that
And
just
yeah, exactly. With a lot of people, that's it. With a lot of people, like the idea of real estate, but they think, they watch all the fix and flip shows and they mistakenly think that, for me to invest in real estate, I've got to, swing a hammer, right?
yeah.
And they don't understand, how they can get into real estate. And
Yep.
they listen to their
Or I've
financial
got to have a
advisor.
pile of assets that the bank says, okay, hey, you're secure, I'll loan you the money, when in fact
Yeah.
there's multiple different layers to that where you can angle it and wedge your way in.
Yeah, there's lots of different ways to get in, but I would say the average investor probably has, or the average person who wants to get into real estate probably had the same mindset I did, 15 years ago, where, well, I'll buy a single family house and I will be a landlord,
Yep.
and a lot of people just don't have the stomach or the time for that. But
Yeah.
I
Well,
think for a lot of people, it's just, they academically they look at the idea of real estate and say, yeah, the idea of real estate's great, but my financial planner gives me a bunch of, you know, exchange traded funds that I can
yep.
invest in, and they're going to, put things on autopilot for me and make it easy. But
Yep.
the truth is, I try to make it easy for people who want to invest in real estate too. So,
Yep.
I'll teach them how to do it. I'll tell them what they need to know, explain what they need to know to make a good investment decision, walk them through the process, and when they're ready, hopefully we have an investment opportunity for them. And if we don't, and they're chomping at the bit to invest, I'm happy to give referrals to any one of my friends that are doing the same
Sure.
type of thing.
Yeah, we're the same way. I mean, if we don't have a fund open or something ready for people to actively invest in, of course, we definitely would rather see them their needs taken care of immediately with again somebody that we could refer them to. Now, I had a gentleman the other day who was talking about the I think he called it the three T's. I've heard the four T's, whatever. But like you said, the people that come into or envision themselves in potentially doing real estate, again, the multiple facets that
Hmm.
could include are everything from real estate sales, real estate brokering, property management, ownership, whatever their need is. But the three T's, I think, is what we call it. It was tenants, toilets, termites, and tenants, toilets, termites, and trash. I can't remember, but
Yeah.
anyway, and a lot of people see that and they're like, "Oh, I don't have the stomach to take a phone call at 2 in the morning because my tenant's microwave is out or something like that." And so many people see that and they're like they shy away from it. But again, when you start looking at saying, "Hey, what did this portfolio of mutual funds yield versus what did this portfolio of 650 doors yield?" When you start looking at the ROI and the real numbers, I mean, it just doesn't do anything but make sense. But I think people don't know where to start.
Yeah, and that's really the issue is they just don't know where to start. And the nice thing about passively investing is you don't have to deal with any of those T's. You don't have to
Yeah,
worry about middle of the night phone calls, plugged toilets or whatnot. So you know we make it easy. And I know you do the same. You give everybody the benefit of owning real estate without the headache that comes along with being a landlord.
yep,
And we'll take some of that. We'll take a good portion, a good chunk of that headache on ourselves to
yeah,
be able to manage the property. And we hire good managers. We hire good property managers to actually take care of the tenants and toilets and termites
yep.
for us as well. And so
And
we're also not taking that call. We're just we're working. We're managing the property managers. We're managing the value add, the construction process. If we're renovating units, we're managing the entire process. Telling the property managers, hey, I want you to do this with this unit. We want you to put this LVP in. We want you, here's what we want the flooring to look like.
sure,
We're giving the property manager the vision and um, the money to be able to execute our vision,
yeah,
and just basically making sure that, at every step in the process that they're essentially meeting our expectations and our investors' expectations.
sure. And I
So,
think it would be worth mentioning too the the line of risk that is taken off of the passive investor when they're an LP in a partnership or an LLC or whatever the case is. Like as a passive investor, the risk that's removed from
mhm.
actually being they're held differently than the manager or GP side of it, I guess is what
Yeah.
I'm getting at.
Yeah, and that's absolutely true. We also shoulder the risk burden. We
Yeah.
we are signing on the loan. Not the passive investor. And inside the limited liability company, the LLC that we set up, we shoulder all the risk there too. So if there's ever a lawsuit, if there's ever anything else, I mean, we're going to do everything we can to operate, inside the bounds of the law. And that's going to, number one, mitigate, chances of most lawsuits. And, number two, we're going to carry insurance, which is we do a lot of things to
Yeah.
mitigate risk, but there's always the one-off, there's always the perfect storm situation. But end of the day, we still shoulder all of the liability as well. And the only liability a passive investor ever has is with the capital they invest. So,
That's right.
and you mentioned earlier, real estate value is never going to go to zero. So people are never going to lose all of their money.
Yeah.
Or it's not likely that people lose all of their money. Let's put it that way. But worst case scenario, the investor loses, a little bit of their capital.
Yeah. Yeah. Well, listen, we're kind of getting close to the end of the show, and I hate to put you on the spot here, but I would like for you to tell the listeners a couple of different things. I'd like to know a little bit about what is the best book that you've read either recently, and I guess part of this question needs to be posed as other than Rich Dad Poor Dad, because I think that's everybody's potential answer. But what's the best book you've read either recently or before?
It's tell you a book that I've read probably 20 times cover to cover. It's the Book of Mormon. I think that's helped me more than anything else. The number two book that I've read is the Bible. And so if you look between those two books, I think a lot of what I do hinges on what I've learned from those books.
Certainly. And what's the best trip you've ever taken?
Ooh, best trip I've taken, man. We lived in Rio for 2 years. We went and chased some waterfalls. Took my kids to Disney World last year. I think the one I'm looking forward to most is I promised to take my wife to Rome after our first syndication closed. And then COVID happened and travel got shut off.
Yeah.
So
I just got back from Rome last week.
Oh, nice. So I'm going to say the best trip I've ever taken is, next year with my wife in Rome.
Yeah, it's great, man. Italy is a gem that I think everybody needs to see sooner or later. So, real quick, can you tell the listeners how, if they want to join up with you or join up with your education or whatever the case is, how can they reach out to you, and what's the best way for that to take place?
Best way to reach out to me is on LinkedIn. If you reach out to me on LinkedIn and say that you're interested in learning more about multifamily, I'll send you my calendar link. Super simple like that.
Yep.
But I spend a lot of time on LinkedIn myself, and that's usually where I make some really good connections. So
I agree. I think it's a resource that's really invaluable to a lot of people from the syndication or even just the business world in general. So
absolutely. And other than that, I would say our website, thetribeoftitans.info, has a lot of information. Within the next couple of weeks, we're actually in the process of doing a complete overhaul of the website, where we bring our podcast and our educational community together. I mean, they're really two things with the same purpose. So, the Diary of an Apartment Investor is the podcast. The Tribe of Titans, our educational community. Within the next probably month, both those websites are going to be merged together, and then the tribeoftitans.info is going to be a much better spot. Right now it's okay.
Awesome.
In my opinion.
Good deal. Well, Brian, I want to thank you so much for taking your time to be on the show with us and hopefully educate and drop some nuggets for our listeners. I want to thank you for your service to our great country, and that goes, I think, for the majority of everybody that's listening as well. We want to thank you for that. And again, we want to thank you for being on the Cash Flow Pro podcast. And listeners, thank you for taking your time out of your day to listen to me and Brian talk about multifamily and investing and everything else that we covered today. So hope everybody has a wonderful rest of the day.
All right. Thank you.
Cash Flow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.